All right. Good morning. Welcome to the Short File Show Live. My name is David Lincoln, and so we've got um, a market that is stuff's going on. I mean, we had a big sell-off yesterday, and we were up a lot overnight as far as the futures, but it gave back a lot from like 4 to 6 in the morning. Let's see if I can get. I've got all these discombobulated screens behind me. Let's see if I can get that stuff straightened out, and we can take a look at uh, at what we've got going on as far as the market right now. And this is a situation. We had that Sunday uh, strategy thing, and somebody was asking me, "Oh, well, under what conditions would it be time to, put a short position on?" And I was saying, "Well, it really depends, but certainly where we were on Sunday evening, there was a chance to put something on because." We were already kind of elevated. I think VXX was already up around 16 then. But certainly yesterday we had the VIX up like 5 points. And it was certainly an opportunity to put something on. And I certainly did actually short some volatility yesterday morning. As you see in the title, the term structure is really discombobulated now. And so let's go actually to the term structure and let's talk about it for a second because it's an interesting kind of unique shape right now, and let's talk about why the term structure is shaped this way. Now, for those of you who may be kind of newer viewers, the term structure is one of the real basis of this is part of the real basis of this channel, which is talks a lot about the VIX. Now, what this is it's just a simple display chart that shows the relationship between a couple different products, which are the VIX futures. And the most important ones always are the first 2 months because, a few years ago they came up with ETPs that would let you trade the VIX, exchange traded products that would give retail traders access to getting long or getting short volatility. These products being UVXY, VXX, SVXY, and all of these are based on these first two futures, the front month two futures. And I'm even going to get my little pen out here for a second. So, so all of the so UVXY or VXX, they're all just based on an average, which takes into account these two front month futures that adds up to 30 days out. So right after expiration, which we're only a little while out of expiration, like a week out of expiration, less than a week out of expiration. So most of the ETPs are mostly based on this front month future, that being the March future, which is this first one here. It says 1955, and you'll notice 1955 is lower than this broken up line here, which represents the spot price of the VIX, and this is what we call an inverted state. Under normal circumstances, the VIX spot price, this 23 price, is below all the futures, and the futures sort of arrange themselves from the front month towards the back month, slowly moving up in like an upward slope. That is the normal contango shape of this term structure. But right now, we've got the spot price higher than all of the futures. And also noticeable on this chart, you can see up here in October, which is the expiration period for the elections in the United States, is higher than the rest of the months. And that's just people, when they're recording spreads and quoting this stuff, they're giving reverence to the fact that there is that election and it will be more volatile than the other periods around it. What's up, Al? Nice to see you here. It's I was very pleased to see that you have done some stand up the other day when we were talking. I think that's really cool. Al's one of the funniest people I know, and always gives me a hard time when a hard time is due. Al, I just want to tell you, just for an aside, my Al knows my politics. I try not to talk about politics too much on the show, but my family is split. And we've declared a truce in my family because we've got liberals and conservatives in there, and nobody can seem to get along. But the truce is like it isn't held very well a lot of times, and my mom actually is very aggressive at like trying to break the truce or trying to needle me in any way possible. And the dynamics of it is that my mother and father are very conservative, and I'm more liberal, and my mom said yesterday, she said, look, you got to go easy on your father. He had this terrible nightmare that a certain person became the president, and, it's just been really rough on him lately. So go easy on him because, it was just a nightmare. It's probably not going to happen, but, he's really suffering. This is my mom's way of needling me. She also, the other day, she was like, she said, I really think that Bloomberg guy is, I really think he's a really good candidate, and trying to engage me. And I'm like, I'm not engaging with you. Stop. All right. So back to the term structure. We see this in a weird shape, and this is a snapshot. That's one of the most important things to remember about the term structure. It's a snapshot. This is always moving. First of all, we are always moving forward in time, moving towards the right of this. And when you see these months on the bottom, this doesn't represent the actual month. It represents the expiration cycle. So usually like the third week in the month is when that month expires. B, everything is always moving. And at this point, what the dynamic and what's been moving is that we are coming off a big down day, right? So what that means is this spot has been moving lower. The spot price has slowly been moving lower the whole time, and thus, although this looks very discombobulated, it's less discombobulated than it was yesterday. This VIX spot price 23.10, that was up like over 8 points yesterday, and thus there is a bigger distance. Right now, there's what? There's a little over 3 points between the front month future and the spot price. This distance here is a little over 3 points. Just yesterday, this distance was a lot higher. It was up here, and the distance was a lot higher. So and the dynamic that occurs here is, as long as the market doesn't continue to accelerate to the downside, if it goes sideways or if it actually we rally, and we're up a little bit right now in the point in the on the charts. If we look at a chart from last night, E-minis are up 17 now. So if we look at a chart, we can see that we are up, we're off the lows, and we're actually positive on the day a little bit here. You can see we were more positive at like 2 in the morning, but we sold off down to 6, but we never actually went to negative, or if we did, we just went slightly negative. And now we've regained some ground. Also, NASDAQ up 78, and we're in positive territory. The VIX has come in by 2 points, so just under 23 right now. The VIX central term structure is slightly delayed. And the VIX futures are down. They've come in a little bit. I know it's kind of small to see this, especially if you're looking on a phone, but front month future is in by 52 cents. The second month future in by 37 cents. Now, right before like 8 last night, this stuff had come in even more. The front month future had come in by a point. And so we recovered a lot after the close yesterday. We gave some of it back at like 6 in the morning, but now we seem to be moving back up again. And this is very typical for having a sell-off and then buying the dip. This puts it more in perspective. This is a 5-day chart, so you can see we're off the lows, but we're not that much off the lows. We're a little off the lows. But if we can just kind of hold here, the thing that made the VIX just skyrocket is this downward momentum. If we can break the downward momentum, then the VIX will recover and move back down, as it were. And here's a VIX chart right now. You can see we're off the highs, but we still haven't come anywhere near filling that gap. There's this gap from 18 up to 23. And when you look at this series of charts I just showed you, it puts the term structure a little bit more in context. If we go back to our term structure here, now you can imagine in your mind's eye that there's pressure on this spot price here to move lower, to push lower, and if things continue the way they've been moving in the last couple hours, we will indeed see this spot price move lower. However, it takes a little while to write and to bring this VIX term structure back into groove, right? As I said, your typical term structure would have this spot price lower than all the futures, and the futures being arranged in a contango shape. Right now, we are in a backwardation shape, and by that, it's a fancy way of just saying that the March future is higher than the April future. However, in the absence of continued acceleration to the downside, this chart will right itself where the spot will move back below the futures, and it will come back to a more normal shape. However, during the time when it's discombobulated this, when we look at VXX or UVXY, as this adjusts back to a normal shape, the implications to UVXY and VXX are such that you're going to see the VIX move down, but VXX and UVXY barely move. And that is due to the fact that for this term structure to get back in whack, you need the spot to go down without the futures moving much. And the implication of that is just that VXX and UVXY are not going to change that much, as you could see the VIX down 3-4 points, and you're not going to get a corresponding move in UVXY and VXX. They will move down a little bit, but you're not going to get. It's going to be a slower move to the downside, and that's because this term structure needs to right itself. As we spiked upward yesterday, and you saw a VIX get to 25, over 25, the front month futures only got up to like 20. There was a spread. They were inverted by 5 points. And for the same reason that UVXY and VXX don't perform that well when we get a spike compared with the VIX, they don't perform on the way back down. You're going to have to wait for the term structure to adjust itself back to normal before these are going to really act really well to the down move. So be prepared to have to kind of wait for stuff to get back in line, for the VIX to get back below 20, and for the VIX to get below these futures again before UVXY or VXX are going to actually move lower. The reason I'm telling you this is a lot of people, of course, are going to short volatility on a spike like this, and I don't want people to be frustrated when they see, oh, wow, the VIX is down 2, and VXX is only down, the VIX down 2 right now, VXX is only down 67 cents. And that is due to the fact that the term structure has to readjust. So be cognizant, know that that's going to happen, know that it's going to take vol coming in quite a bit before you get your VXX and your UVXY rolling back downhill again. So be patient. This is just the nature of the beast here. It's good on the way up when we're spiking. It's good news if you're short these products, because this term structure provides, I like to call it a shock absorber for the move up. But on the way back down, it has to normalize again, and that means that you're going to see these products kind of laggy, not doing that much. They'll move down a little bit as the VIX comes in, but until the VIX can get below the futures to a decent extent, and the relationships are back in line as far as the term structure, you're not going to see UVXY, VXX, or TVIX really burst lower. And you should, once you know that, you can trade accordingly. One of the advantages of this for a trader is that you don't have to be super aggressive at when you short volatility. It's not like you have to catch the apex of the spike to make money shorting volatility, because you have the nature of the way the term structure acts like this. You have some time to put that short on if you're so inclined. As far as is the I know people come on YouTube and they want to know what's the market going to do tomorrow, and the short answer to that is nobody knows what the market is going to do tomorrow. And just because I have a YouTube channel doesn't mean I know what the market's going to do tomorrow. Typically in these situations, we see the dip get bought, as they say. Someone comes in and buys the market. So what's your theory, Al, that if when I cut my hair, we're going to rally again? And let's talk about Tesla for a second. Tesla just seems so strong. I mean, yesterday, it really didn't. People are still like, there's no fear in Tesla at all. People seem very comfortable paying $850 for Tesla, and there's no fear that they're going to get burned. And I think Tesla is going to have to test. It's going to have to test the downside a little bit sometime. And now it keeps testing the upside, At some point, Tesla is going to have a pullback, but really didn't feel yesterday like it was pulling back at all. It felt like it was, it was kind of sympathetic to the market. When the market's down, when the Dow's down 1,000 points, then obviously it's not going to be making new highs. But Tesla did not. It seemed to pretty much shake stuff off. I mean, this morning we're looking at an opening of around 850. It's 848 right now, and it just seems strong. I am considering the haircut thing, Al. I'll do whatever it takes to get the market back rallying. I'll do my part. But we have. It seems like we've broken the down move for now. It doesn't feel. It hasn't felt like there was a ton of pressure to the downside. In fact, yesterday it kind of felt like we made that one big move, and then it was just kind of back and forth, bouncing around between, like, in Dow terms, between down 800 and down 1,000. It didn't feel like there was continuing pressure to the downside. But like I said, I don't know what's going to happen. I did do something yesterday. I did buy some MJ, and I just feel like it's just been so beaten up, this whole industry, all the stocks. It's been so battered down that I bought a little just on a little mean reversion type play, that being it's got to come off the lows at some point. I mean, look at the chart for MJ. It's just gotten battered. It was up around, it was 3 times the price it is end of 2018. And then we saw this whipsaw, and you got to believe a lot of people got hurt on this current down move. People obviously bought the dip here, and then you got to believe people have gotten hurt. It's interesting when you talk with people that aren't in the market, just casually at like a cocktail party or something. People always bring up MJ stocks, and I know people have just gotten destroyed on this stuff. The names, I don't know who is going to provide leadership here. It seems like the leadership has been provided once again. A couple years ago, we had that gap up by CGC, which preceded the move up in a lot of these issues. And once again, we had CGC up last week on, I believe, earnings, and has remained strong. However, Afria is the one. Afria is the one that I actually made a lot of money in the fall of December. I was buying it around $4 or $5, and it got up to like 19 or something. And then I tried to play ACB, and I just got chipped up. We know Tilray, the big move in Tilray. Tilray was, similar to your BYND. Tilray had that huge spike and was a fun one for many people to play. But, Tilray's just pretty much gotten ground into the dust since then. And, the industry has just gotten destroyed. And there's multiple reasons for that, and I don't see it coming back anytime soon. But maybe we just come off the lows slightly. A lot of these stocks that I tried to play as like mean reversion, I just didn't wait long enough. Like, for example, MNK. I tried to buy the dip in MNK when it was down around like, I was buying it around 10 here, and then I was buying it around like $2, and then I just gave up on it, and it doubled in price. It got up to 4, 5. MNK has this is one of these stocks that got caught up in the Purdue Pharma opioid litigation, and it's been profitable the whole time, however, and has had other products that have been profitable, and has the ability to come back to life. If you've got a company that's making money, they're making a product, they're making money, then they have a shot. And MNK could be a turnaround kid here, and it started to look like that a little bit. But ACB. There's so much talked about. This ACB was like the number one traded stock on Robinhood. I think last year it was like the number one traded stock, and people just got ground to pieces in this. And I wish that there was some way to tell like new traders, like if you're a new trader, buy something conservative, buy USMV, low volatility index of U.S. stocks. Buy the SPY. Tell people to buy something, because it seems so often like new traders start buying penny stocks or buying and I saw some, my definition of a penny stock is any stock under $5. I saw somebody I think defining penny stocks as everything below $1, but for me, penny stock is anything below $5. And if you go in any of these chat rooms for stocks, people will be talking about these biotech penny stocks that have like one product that might cure cancer or something. That is certainly, I don't think, the first thing you should be getting into if you are going to start trading the market. Find a real company. Start by trading Apple. Start by trading the SPY. Start by trading a real company that's not super volatile and actually has a product. It's just my opinion. All right, so I just wanted to come on quickly and talk about this stuff. My trade yesterday was that I got out of my Tesla short for a profit, and I did short the VXX. I went ahead and I bought a put spread. It's gone against me so far. I think it's a $500 loser so far, because we went higher after that. I put the put spread on when VXX was around 1650, 1660, and we're up a little bit from there. But that's fine, because we're still in the middle of this spike, and my put spread is out to July. It's 17 July, and so we've got plenty of time to come off the spike here. And so I feel perfectly comfortable with that position. What I bought, let me get out of the way here just really quickly, and I'm going to end it here. What I bought was the July 16-13 put spread. If you look at my activity here, so I bought I sold the 13 puts at $1.31, and I bought the 16 puts paying $2.95. So it's, if you do the math, I'm paying $1.64 for a $3 put spread. So paying $1.64, if all goes well, essentially we're making the bet that VXX will be 13 or below at the end of July. And, we just came from 13 a couple days ago, so it doesn't seem that unrealistic that we can get back there. If I get out of the way here, here's the chart. VXX was 1337. It got all the way up to 17 here. My bet is that it's going to get back to 13 by the end of July. So I think that gives us plenty of time to just come off this spike and also get back in contango and start decaying again. Because remember, these products decay over time. It's certainly not decaying now because we're in this in the middle of a spike, but products decay over time. So this position gives me a delta of, let's take a look. So I have some sample trades in here. So it gives me a delta of short 500. So every point that VXX goes down, I make $500. Every point that it goes up, I lose $500. That's my position right now. I also bought one of the Jan 12 10 put spreads, but my main position is long the July 16 13 put spread in VXX. We'll see what happens from here. The market seems to be trying to hang in there. I think it would be a huge victory if we end up on the day today at all or relatively unchanged. As long as we break the down move, I think that's a huge victory for us. We have seen vol come in so far. We are before the open, though. We don't open for another hour. So best of luck to everybody with what you're doing trading today, and I hope to hear from you soon in the comments. Please like this video. Please subscribe to the channel. Support me in Patreon if you'd like, and I will see you next time on the Short Vol Show Live. Thanks for watching, folks. I really appreciate it. Bye now.